things to act on later. So just really quickly, I'm going to introduce myself for those of you who don't know me or anything about Blue Octopus. Um, we are a SLAM certified small operations and strategy firm located in Central Virginia, right in Richmond. We're board source nonprofit consulting certified. My partner Shelly Sowers and I founded the organization a couple of years ago. We've worked in and with nonprofits and state agencies for more years than some of you have probably been alive. And we're really happy to be partnering with Trustword. Stephen Weir is on the call. He's the owner and CEO, formerly known as RCG. And I worked with them for many years, accounting, bookkeeping, nonprofit tax issues, all kinds of things. So just really quickly going to turn it over to Stephen to talk a little bit about um, his organization, Trustword.
Yeah, thanks, Laura. So, yeah, so we're sponsoring this session, and I think Laura was underselling how much we worked together in the past. We had just a chance to do a ton of great work with Laura across multiple organizations, and I've just always been a big fan. So what we do is we provide bookkeeping, accounting, fractional CFO, basically anything accounting and finance related that you need. We try to tackle that. Go to the next slide, please. Or can I go to the next slide? Okay. So this is a beautiful picture of the team right outside our office in Richmond, Virginia. Next picture, next one.
Oh, sorry, that was it.
No, that's right. No, that's totally great. We don't. This doesn't need to be belabored. So we're thrilled to. Honestly, I feel like I learned a bunch at the last CYA, and so I'm excited to hear Laura's presentation again, and we're just thankful to be a part.
Thank you, Stephen. Just quick housekeeping. Shelly is in the background managing the chat, so feel free to use the chat to ask questions all along, interrupt me. We prefer it to be conversational. We'll also have time at the end for questions, but if you prefer the chat, no problem. You can also come off mute and ask that way as well. So just a little bit about the current. Shelly and I started this in January because we saw a real need in Virginia for nonprofits to come together. So Virginia is one of the very few states that does not have a statewide association for nonprofits. Most states have a central location for nonprofits to come together to learn and network and share resources. There are some wonderful regional groups, of course, in Virginia, but nothing makes up for having that state presence. And there are 53,000 501c3 nonprofits in Virginia from the last IRS business master list that I pulled. That's a lot. And 76% of those have revenues under $100,000. So we have a lot of nonprofits with very few resources, and we really need opportunities to come together. There are a lot of reinventing wheels, and we're working in isolation, and we wanted to do something to change that. So we founded this. We're meeting every other month. We'd love to have everyone come out. We prefer to do it in person. This is sort of an exception, this virtual edition, because it's so important and foundational, and there were some updates since the last time we did this very session in February. So before we get into today's agenda, the title is Cover Your Assets. Either in the chat or if you just want to comment, what do you think about when you think about your assets, your nonprofit's assets, or if you work with a nonprofit, what those assets are? What do you think that means? I can't see the chat, so I'll rely on you, Shelly, too. I'm scared to touch my monitor. And it's not just money, so think outside the box a little. Okay, nobody? All right, then I'll answer. Okay, someone said assets are donors. So absolutely. So people are absolutely part of your assets, whether that's your staff, your donors, your volunteers, your board. Volunteers, yep, thank you, Shelly. All of that are things that you want to protect in your community asset perspective. So your reputation, community trust is one of your biggest assets. Very, very difficult to rebuild if you lose that. Relationships, as someone just commented, that donor-funder relationship is really important. Your data is critical. We'll get into that a little bit. You have to be really mindful of where your data lives, how it's being managed, any third-party platforms that you're using, your intellectual property. I've seen this happen in too many nonprofits where they lose work that they've done because it walks out the door with a staff person. And then, of course, that could apply to your physical assets as well. So your property, whether it's a laptop, it could be a printer, it could be a phone, whatever it is. This is the universe of your assets. Of course, it's money, but there's many, many things that you need to work to protect. Nonprofits operate in a very, as Stephen will attest to, not just a complex financial environment, but regulatory and reputational as well. So we're asked to do a lot with very little. So what we'll cover today, and we could do a session on each one of these, but we're going to talk a little bit about what nonprofits are dealing with today, some of the issues around fundraising compliance, some new things that are happening. Then we'll get into a little bit about some of the internal controls we want to make sure that you're mindful of and implementing. And then governance, my favorite topic. We will get into some pretty nuanced governance issues in relation to the IRS, and we'll kind of wrap up with a summary of what we talked about today. So anyone who knows me knows I will have a Seinfeld joke or reference for absolutely anything because there is a Seinfeld episode about everything, I promise you. There actually is one about risk management. I did not AI or Photoshop this picture of George Costanza, my favorite. But really just as a way of introducing risk management, it's a process, right? You're identifying your risk, you're understanding it, assessing it. You want to understand and address potential threats to your organization before they happen, but also don't forget about after they happen. You want to sort of do a postmortem and understand what happened and how you can prevent it from happening again. And it's not just about, a lot of people think about risk management, oh, it's just like my audit, it's just having insurance. It's absolutely about policies and training and documentation, your culture. There's a lot of risk in culture and personnel and sort of everything in between. And then in today's climate, risk management has taken on some new dimensions, even looking at the words that you use in your mission, in your values, your vision, the grants that we apply for. Everything is under scrutiny with this administration for nonprofits in particular. And I recently read somewhere that nonprofit resilience is depending less these days on predicting outcomes and more on preparedness. And that's really what this session is about, to make sure you have some tools and resources and knowledge for preparedness. We all have some level of that, but just to be extra careful in this environment that we're in right now. So let's just look at some common risks that nonprofits are dealing with. I kind of just put it in to these buckets. Financial is pretty obvious. You want to think about fraud, embezzlement happens more than we like to see in the sector. And a lot of that is because there were inadequate internal controls and training and oversight. And then this is a big one for nonprofits. And Stephen, feel free to chime in here, but not really understanding how restricted and unrestricted funding works and misusing restricted funds. There's a lot of we probably, Stephen, could do a whole session on restricted funding. I don't know if there's anything you want to say about that, but
yeah, I mean, I can just chime in that restrictions, you want it to be binary, like it's restricted or not restricted, but actually every unrestricted is clean and easy, but every restriction, it can be really different. And so even if you know kind of, hey, this is restricted, like how it's restricted and when it can be released is unique to that specific item and or that specific funding source. And so you have to be very thoughtful about that. Government funding is really, restrictions are really different than private funding restrictions, for example. And also you can very easily look at a bank account and say like, oh, there's a lot of money in there, we're good, but actually a lot of that's restricted. And so it's actually, the picture isn't as strong as you might hope.
Yes, thank you. So the other buckets are governance. Of course, you really need strong governance. People don't, it's a boring topic, not to some of us. We'll get into that. You really want to make sure that your board and your leadership understands the principles of of governance and pays close attention to what's happening. Board training is a big issue. There's a lack of, a lot of people join boards because their friends kind of suckered them into it, or it looks good on their resume, and those are all great things. But there is a heavy responsibility that comes along with being a board member, including legal implications. So you definitely don't want to have an untrained board or undisclosed conflicts of interest. And then I can't tell you how many nonprofits don't properly document their meetings and minutes. This is not good. And then executive compensation is a massive issue in the nonprofit sector that we're going to get into in some detail. The legal and compliance bucket, just being unaware, there's just so much to contend with. So subscribing to some trusted newsletters, and I'm happy to recommend some ones that we rely on, just who are curating and looking at all the things happening so you can keep up with it to some degree. We see a fair amount of lapsed charitable registrations. We're not really understanding that if you're soliciting in other states, you have to go through their process, not just registering in Virginia. Operational, another one of our favorites. Again, just going back to internal controls, there's a lot of risk with poor data governance, data theft, key dependency. So what if your, database manager left and they didn't document, their processes, or even left you their password? What are the risks there? It's really good to just do an operational audit, and it can be really simple. It sounds more complicated than it is. Just where does your information live? Who has access to it, and documenting that and making sure that who where your information is if someone leaves. Reputational is sort of speaks for itself, but negative press or some social media garbage that goes on, one accusation, whether founded or unfounded, if you don't have a communications plan, a crisis plan, if your policies and procedures aren't in place, that's a massive risk that people don't think about. And that's the thing that you all, the nonprofits, work the hardest to get, especially in such a sea of competition. I already, told you there's 53,000 nonprofits in Virginia, and to stand out and build that reputation and then lose that is devastating, and can take some organizations to their knees. So kind of basic, just our foundation. To mitigate risk, you really want to look at your insurance coverages. It's really, really critical, and make sure you understand them. I highly recommend working with a broker. They make life much easier, but just make sure that your broker understands nonprofit organizations, because they're not the same as for-profits, and they shouldn't, if they say they are and it's all standard, they're wrong. So please make sure you're working with a broker who understands the nuances of this. Some examples are, if you're running programs with stay programs for youth or residential, particular people with disabilities, there's even more risk and additional coverages that you want to be looking into and beefing up for abuse prevention. And they should have that recommended to you if they haven't. D&O is baseline, directors and officers. This protects your board and leadership for personal liability. Every single nonprofit with a board should have this, and educate their board about it as well. General liability, this is just your, garden variety property damage, bodily injury. Employment practices, we always recommend. You want to just make sure you have good coverage related to hiring, firing, discrimination. And then this one, of course, has really exploded in the last 10, 15 years, but especially the last 5, cyber liability. We've seen a lot of, us in general in the country have seen data breaches, ransomware, and other strange cyber incidents that have happened. So you want to make sure that you're covered for that. Another issue that has sort of popped up in the last, I don't know, a year and a half or so, is reviewing your risk exposure from third-party fundraising platforms. Just ask your broker about these issues. I haven't spoken to one since this has come up, but I just kind of want to flag it, and we'll talk about what's going on with third-party fundraising platforms here in a little bit. Any questions so far? I know I talk fast, but you can also just say talk slower. Should I talk slower? No problem. Okay. So I mentioned earlier that with this administration, there is increased scrutiny of nonprofits, and that's whether you're doing everything right or not. Some updates since we last met, for folks who get federal funding, or even if you contract with state agencies who are your pass-through for federal funding. So, a lot of folks are getting funding. For instance, we contract with the Department of Health. So because of that, we have to be registered in the System for Award Management portal, which is sam.gov. And there are new proposals that just came out, and this came out for comment, I believe, at the end of February, early March. There was a very short window to provide comments, but they're requiring more certifications around DEI, immigration, and national security. The requirements are sort of vague, but it's basically more of they're getting at more data collection and litmus tests for organizations that they don't believe align with their stance on certain issues. So 1,300 nonprofits signed a letter, a national letter opposing the changes to the SAM registration, and the rules are not finalized. But if you have any sort of federal funding, whether it's directly with the feds or again, it's coming through one of our state agencies who gets plenty of federal funding, whether it's Department of Social Services or Aging and Rehab, criminal justice, it really doesn't matter. All of these state agencies are using federal funds to contract with state partners. And so if you're in SAM, just kind of keep an eye on that. Another update to share is since since Trump proposed his FY27 budget, he formalized some of the memos that he had put out in relation to tax-exempt organizations, nonprofits, sort of being labeled as domestic terrorists or financing terrorism, and their definition of terrorism. So the proposed budget formalizes that memo, which was an SPM 7. They're calling it a joint mission center. And so this will get staffing if this passes. And this will be, again, just more of an enforcement and scrutiny of nonprofits and whether or not they are considered to be funding or supporting terrorist organizations or the one themselves. And again, the definition of terrorism is theirs, and you can look that up. 3,700 nonprofits came out against that, I think I just said. And April 14th, the Democrats sent a formal inquiry letter to the IRS, really just saying that the IRS has been weaponized to some degree to target and investigate specific nonprofits, especially ones that are supporting nonviolent protesting. So that's something we're just watching. The Democrat and the House, the Ways and Means Committee, their communication and their hearings about nonprofit oversight. And so far, nothing with teeth has come out really, except some memos, but it's just something to pay attention to. Another big one at the IRS is just massive staffing reduction, some budget cuts. And normally it sounds great to think there's fewer IRS agencies, but it's actually not, because with fewer resources and knowledgeable people, especially in the tax exempt side, the IRS is just continuing its move towards data-driven enforcement. So that's less routine oversight, more use of algorithms, and it's just not as good as having a human being that you can, talk to about it. And then finally, the proposed budget for FY27 takes a real hit on human services, housing, food security, healthcare in general, education. So a lot of the programs and work that nonprofits are doing are looking at some massive cuts. So if you all don't follow the National Council for Nonprofits, they're doing some great advocacy work and education around the impact of these cuts to the sector. So we're just keeping our eye on all of this. It's a lot to watch. Okay. So the challenges, in addition to the scrutiny, again, just relates to what we were just talking about. The funding uncertainty is really the biggest risk for the entire sector. National Council for Nonprofits. Someone asked the name of the National Council, and I'll send out a follow-up email. But they have a great newsletter and tons of fact sheets. They have a whole spreadsheet where they're tracking the impact of all the flood of executive orders and all the changes in legislation and policy that impact the whole entire sector. So they do a great job. So again, the public funding shifts are a risk for our whole sector, individual organizations. So sharing information and resources and coming together is a way to help manage this risk. We saw the Urban Institute did a report recently that 34% of nonprofits, I think this is low, experienced federal funding disruption last year. And what that looked like is either completely losing their funding or massive delays or a freeze or receiving a stop work order. It'll be interesting to look at some of the data in this first quarter as well. And this extends beyond federal funding, of course. It's in the states as well. And then even the organizations who didn't directly experience, their partners were experiencing it. So just in some way they were, understanding that the fundraising landscape shifted radically because there's just more competition for grants and private funding with the loss of so much federal funding. I just want to quickly mention Medicaid. Again, we're seeing some very transformative changes happening, and the effects will really come to light in the next couple of years, but estimates are that 18.5 million adults will be subject to the new work and verification rules, and that 36 million adults are at risk of losing coverage entirely. That is going to impact everyone, the economy, healthcare, food services, utility, you name it. There's really not much that won't be touched by these significant administrative requirements and loss of coverage. Workforce, the risk for nonprofits is not surprising, but it's still alarming. 90% of nonprofit leaders, ForceForce did a recent survey, are reporting burnout concerns. Here's one that's really concerning, that turnover in the nonprofit and healthcare sector is outpacing the corporate sector by quite a bit. Which we're operating, which is the boomers we've been hearing about the massive exit of boomers for 15, 20 years, but it's here. And even some of the oldest Gen X are 65 now. HR 1, so are really shrinking the talent pipeline, as we really need to be attracting, young people. Hear Governor Spanberger talk about this recently, healthcare workers in the state, and we all need healthcare workers. So just wanted to sort of give the sad part of it and some of the things that you can do. I'm sure none of you have heard diversify your funding. Yes, we hear that all the time, but we don't necessarily see that operationalized. It's more just something we say, but just to really rethink your work and how you can monetize your programs. Think about paid trainings, offering memberships. Events are sometimes a good way to raise money. Individual giving is where we're seeing the most promise right now and sort of the fundraising landscape, and I'll talk about that in a little bit. But partnering on grants is really where we're seeing some more opportunities, and maybe with some organizations that you normally wouldn't think about. We're partnering with a nonprofit in Boston right now. So we just applied for a huge grant for a really great project. We were not likely partners, but I think our odds are really good, and we just happen to connect and talk with some folks, and we're like, why not? Let's go for a grant together. We've heard some really sad news out of Richmond. One of the people on our webinar today is here who's part of it. Two longstanding nonprofits in Richmond have just closed because of all the issues that we have been talking about. And that is devastating for the community. And we watch with sadness as we see more and more of this happen. And so what some of the solutions are to avoiding closure, even though it can be difficult, is to formally partner. So mergers or sharing services, whether that's through affiliation or a complete merger, some other kind of formal partnership is another way, of course, to keep your services going. what we're saying now is, enough of the nonprofit mantra of do more with less. It's just do less and do it better. We can't do all the things for all the people all the time where I won't call out the person on the line on our webinar here, but the story is going to end, and it's not going to end well if we continue to operate with so few resources and constantly churning it out. We just need to do less, and that's all we can do. Okay, so a little bit about thinking out of the box. So we have a lot of great data. This is from Candid, who I still call GuideStar for those of us who are older. They have some really great data on grants and giving, and they narrow it down by state. So if you can see, and if you can't see this, we'll share it with you, but you can see very well that education and the environment and healthcare are well funded, or more so funded than some of the little guys like sports, recreation, even science, so and agriculture as well. So we like to encourage people to think about what you do. So Shelly and I some of our background is in sport and recreation for people with disabilities. And we were able to think about the outcomes that sport and recreation were having in public health, and the social drivers of health, and get funding from the Department of Health and the Department of Aging and Rehab Services to really dig into the data, and leverage some of the funding in health and education for sport and recreation. So if we had just pitched it as it's just sport recreation, you can see they fall at the bottom of funded programming in Virginia. So we just brought it together. So look at who's getting the most funding. You can dig in deeper to this, to the organizations who are getting the most funding, and think about how can we partner? How can we at least change the narrative of what we're doing to capture some of the funding that's coming out to the programs with more. So you can get lost in a sea of similar missions. And if you can be creative, and partner or change your messaging and fit your work into better funded sectors, I think there's a lot of opportunity there that nonprofits should be thinking more about. So there's some good news in Virginia. I was really surprised by this. So this data was compiled, and there's lots of ways I can share the methodology. Using data from the Census Bureau, Department of Housing and Urban Development, the IRS, and multiple metrics, as I said. So this came out end of last year. And Virginia, as you can see, ranks #1 in charitable giving, which I, again, was very surprised by. But that's good news for us. So how do we tap into that data and continue to get more funding from individuals? We didn't do as well in the volunteering, which is a bummer. Again, we did well in charitable giving, so we're #1. That's great. And the universal charitable deduction kicks in 2026. So that is among all the tax law changes. There's some good news and bad news for nonprofits, but that was a bright spot. So I just kind of want to come back to workforce. Again, some of these things are really obvious, but you want to just make sure there's some cross training so you're not one resignation away from crisis, as we like to say. And again, that's happening more frequently than we care to see, and it's really scary. Documenting processes is painful, but institutional knowledge, and you can't document all of it, but processes, contacts, resources, where that file lives, that doesn't need to be in one person's head. It can be just a brain dump and throw it into AI and have it organized. I don't care if that's how everything's done, but your critical information can't just be in one or two people's heads. Succession planning we hear a lot about that, and it's not just for executives. That's for your key folks, your folks who are delivering programs and who are doing an excellent job. If they left, you have no information, have no plan for replacing them. And that goes for board members too. And we encourage board members to have a plan to replace themselves. Advocating for the nonprofit workforce is a big one. So happy to say that nonprofits came together and really advocated for a new law in Virginia, which would allow 501c3s and some other nonprofits to lead health benefit consortiums. So enabling pooled health insurance for nonprofits. This could be a real game changer for recruiting and retaining staff. One of the health benefits are always challenging for employers. So this could be some cost sharing solutions. I believe this is effective July 1. It just moved up through the governor's signature very recently. And we can share more information about this, but this is great news for Virginia. Kind of going back to data and encouraging you to look at these data sets that Candid has available, thinking about the workforce and advocating for your workforce, you can see the economic impact. This is Virginia District 4 on the slide. So you can see that there's 31,000 employees in the nonprofit sector. There's 4,000 nonprofit organizations. I mean, that's significant, and that's good data to share with your legislators or your county leaders so they can see the economic impact and the importance of what you all do in your communities and, help you get some funding or recognition. However, the partnership with your legislators bears out. They need to understand the economic impact of the sector. And another great report that just came out, the Center for Nonprofit Excellence, and they're in Charlottesville, they just issued their 2026 Nonprofit Economic Impact Report. We'll provide links to that as well. But there's just some good data in there to advocate for your workforce. Okay. So now we're going to move on to soliciting for donations. There's a lot going on this year. I don't know if any of you came to the last session, but there was a third-party platform called Flipcause. They were sort of a well-known fundraising platform. They have filed for bankruptcy and are being sued for approximately $29 million in donations that they held in the platform and didn't deliver to over 3,000 nonprofits who the gifts were intended for. So essentially what happened is the nonprofits became sort of unsecured creditors. They may never see the funding. The money just sits in Flipcause, their account, and it didn't flow to the nonprofits. So there's a fund flow issue that I never thought about. Worked for many nonprofits where we just move the funds over whenever we feel like it. So how does your platform hold money? How do they move money? What is your risk there is really important. I don't know, Steve, if you want to chime in if you're hearing anything more about this, but this is a hot little issue right now.
I haven't actually come across this in real life. I have read the articles about it happening in different places, but I mean, I would be careful about what platforms you use, but I've never ever seen it happen in real life.
Yeah, it's a wild story. So maybe some of you remember what happened. I guess it was a few months ago with unapproved donation pages being created for nonprofits. So the state of Alaska is challenging platforms that create donation pages for nonprofits without their consent. So these platforms are using publicly available data, like GuideStar, the IRS, whatever, to solicit donations on behalf of the organizations they never signed up for. So Alaska is suing a bunch of these platforms. So that's just kind of worth knowing about. California and Hawaii recently rolled this out. So California was the first in the nation to regulate these online charitable funding platforms. They are treating these platforms as regulated entities, not just tools and software, which I mean I agree with. Not everyone does, but they're requiring them to register, verify that the nonprofits that the nonprofit customers are in good standing to collect donations and disclose fees. So this applies to any nonprofit that solicits funding in those states. So again, if I was saying if you accept donations from California, your platforms are subject to this law. I don't know if more states will follow. Like I said, Hawaii has, but I wouldn't be surprised if we see it come out in other states. But for a practical takeaway, I'm not saying everyone get rid of your platforms, but just look at the data ownership agreement and just know where your money sits and maybe how long it's held. I'm guessing most people move that money quickly, but I've worked orgs where it's like once a month the money is transferred over to the nonprofit's account. So just knowing the risk and understanding the platform's requirements and anything about dispute resolution. So just taking a quick look at those agreements, but I'm sure hardly anyone ever has. And then just be mindful of your state registrations being current, because again, at least in California, if they're not, that third-party platform is obligated to, let the state know it not really allow you to accept donations. All right, so speaking of watchdogs, our favorite is the IRS. So just thinking about 501c3s, which is really, when I'm talking about nonprofits today, that's what I'm really talking about. The board is accountable for these things on the slide. I don't want to read all of this. The main takeaway here, and I'm going to get into it, is many board members don't know that they can be held personally liable for noncompliance with IRS rules. And that's really important for a new board member, not to scare them off, but for them to be aware of and mitigate that risk. And your D&O coverage is a beautiful thing, but we still want them to be educated about what they signed up for and what noncompliance can mean for them. So if you or your board is not carefully looking at your tax form 990, you really should. It is the primary tool for gathering information about tax-exempt organizations, and they are being looked at much more than they used to be. GuideStar Candid has made sort of revolutionized nonprofit data, and there's lots of ways to get it, very granular data about nonprofits. And there's a story that you're telling. So I always encourage our clients, and as we work for nonprofits, use the narrative spaces to not just have a couple words about your mission, but get into the detail of it. Explain your compliance processes for executive compensation. Funders are looking at it, potential funders, donors, potential board members, way more people than you would think are looking at it. And you are telling a story. I look at it every time before I would take a job with an organization. And I'm not just looking, and people are not just looking at things that you'd expect. So they are looking at your board, whether they're independent board members. People are looking to see if you have conflict of interest, whistleblower, document retention policies. Everyone's looking at what the CEO or ED makes. Compensation is public information for over $100,000. Then some people are looking for non-compliance data. And again, go back to the IRS, who is now having to rely on more data-driven enforcement because they're losing or have lost staff. So looking at your program admin and fundraising expenses, what is the ratio there? Whether you're getting, most of your income from public support, from private donations, so the revenue sources. Events, so you have to report specifically on event income and expenses, and people are looking at that. And then again, I say, tell your story, tell your programs, talk about them, explain it in the narrative, and really hone in on your mission. And Stephen, again, I don't know if you want to say anything more about the 990, but it's one of my favorite topics.
Yeah, no, I mean, it's the 990 is super public. It's a in some ways it's more of a disclosure document than it is a tax return. I mean, it is a tax return, but you don't usually owe taxes at the end. It's about disclosing annually to the public what you're doing and with the funds that have been entrusted to you. So it's a pretty important document. And one to take seriously, and one that people can get, within 30 seconds of hearing about your organization by pulling it up on their phone. So it's important.
Mm-hmm. Thank you. So I just want to highlight, so on the governance, as Stephen said, disclosure and management section. So this is part 6, really highlighting whether or not you have good governance. And I want to be very clear that most of the questions that the 990 is asking about governance does not mean that it's required for you to have these things, but it would be very foolish not to have them. It is absolutely best practice, and it is flagged from many perspectives if you are answering no to some of these questions. So board review of 990 before filing is really, really, really important, not required by law. From the IRS perspectives, check your bylaws and your own compliance standards. It impacts charity ratings if you answer no to this. So conflict of interest, again, best practice, not required by the IRS. Whistleblower policy, document retention, which people really forget about, and the destruction policy, best practice. So of course the 990 has to be available to the public. That is, and the GuideStar again sort of takes care of that. But you need to disclose if you're asked for it. We're going to get into executive compensation. Again, it's not required that you have a policy and process for this, but it is absolutely best practice. So you really want to answer, and we'll get into the specific 990 questions about this. You really want to answer yes to all of these. So the IRS model is looking for unusual financial patterns, but they're also looking for inconsistent governance data. So they use sort of a multi-flag risk system on the 990s. And if you have a higher score, risk scores, then you are far more likely to be selected for an IRS examination or audit. And I've been through two, and it's brutal. So little nonprofits do get flagged and do get audited. I was lucky that my audit was the auditor's first ever audit, so not fun. So the GAO did a study in 2020, and they found that nearly 70% of the exams that came up from this flagging, in reality, 87% of the organizations had to fix something. So they are catching things that are real, errors that are real. And then, of course, there are public ways that people can complain about your organization to the IRS for any actual or perceived non-compliance. And then just if you have a formal relationship to another organization, audits expand to your connected organization. So for example, if you are a 501c6 trade association and you have a 501c3 nonprofit, flags come across both organizations. So not fun stuff, but just it's real easy to put these things in place, to be honest with you, and it could keep you from being flagged. Executive compensation is heavily scrutinized by the IRS and the public. We've all heard stories of those nonprofits, whose CEO make $600,000, and all the bad press that comes along with that. And I'm not saying that's good or bad. It's just something under scrutiny. So you want to make sure that the process for determining compensation of your CEO, executive director, whatever you want to call your top management officials, go through a process, and you are being very careful in how you answer the questions that the IRS is asking about that in your 990. So this slide, you can see that's the exact question they ask. So you really want to make sure that you have a process. And I'm going to get into what it is. It's actually really easy. And so hope to have some folks put this in place that didn't before. A lot of people in our sector don't even know about the 4958 regulations that impose taxes on what they call excess benefit transactions. They use a bunch of terms that are, I don't know, a disqualified person doesn't make much sense to me. I'm sure it does to someone else. But the disqualified person is that executive director or CEO, is anyone who exercises influence over the organization or is in a position to do so. So if that disqualified person, let's just say it's an executive director, if they receive let's just say a bonus or a salary increase that is deemed excessive by the IRS, they're liable. They will be penalized with an excise tax. And then we'll get into some of the board liability, but really it's just thinking about transactions that are above market, and what that data looks like is really important that we'll get into. But just some examples, a fundraising group that gets a generous travel budget from a nonprofit group, and they don't have any market data to back that up, that could be a problem for the organization. So those giving the funding, which could be the board, and those receiving the funding, the executive director, can both be liable from the IRS's perspective. And these are called intermediate sanctions. A real fun read if you want to go through the whole packet of regulations. So again, that funny term, disqualified person, I kind of already said this, but if a person is in a position to exercise substantial influence, and they define substantial influence, or in a position to do so, doesn't matter if they did or not, they are considered a disqualified person. And just to give you some examples, a board member who resigns for 5 years post that tax year, they're still considered a disqualified person. We see this a lot in the field that board members get hired. That's fine, but make sure that you disclose that in your 990 because that's a question that you will be asked about disqualified persons, and it really doesn't matter how much they made. You still need to disclose that relationship, and a lot of people don't know that. So key employees, if you have a person making more than $150,000 a year, and they're in a key management role, they're considered a disqualified person. If you're lucky, or maybe unlucky to have a substantial donor, if they're giving more than 2% of total contributions, they can be considered a disqualified person. Again, just think about that influence. I have worked at a nonprofit where the second highest paid person was the brother of the CEO. So guess what? They're a family member of a disqualified person and they are in a management position and making over X amount, they're a disqualified person. So there's lots of examples of that. So just want to understand who your disqualified people are, because even informal leaders or powerful, sort of influential insiders can be subject to this. There are some court cases about this, as even volunteers being treated as insiders, and the reasoning behind it is just about influence. If they can make a major impact on your organization's operations, they would be considered a disqualified person. There's a case in Pennsylvania where a senator created I'm going to get this right, a charity and influenced its funding and spending, and then also received personal benefits from that, even though he was not on the board and had no formal title. So guess what? The IRS saw the influence, and they're going to consider him a disqualified person. So I just want to repeat this part because it's really important. So anyone receiving the benefit and any board member approving that transaction are subject to these penalties and the intermediate sanctions. So just want to pay attention to this. And it all sounds really complicated now, but I'm going to distill this and boil this down into a really easy way to make sure you don't have to even really worry about this too much. So again, I just wanted to highlight some of the questions that are asked specifically in the 990, and just remind you that the look back period for disqualified persons is 5 years. So even if the ED is gone, if some kind of trouble comes up with some kind of compensation issue and they've only been gone 2 years, they're still on the hook. Same for board members. So just really quickly, I already talked about excess benefit transactions, but it's really where the value of this economic benefit is not at market, exceeding the value of the consideration received by the organization is the way they put it. And I'm going to get into some specific examples here. I want to be mindful of the time. So here are the specific penalties for the person, let's just call it executive director, say they got a $200,000 raise. Here's what the penalties could look like if the IRS determined it was not within market, and then the board members who approved it. These penalties are super rare. I don't want to scare people, but you just don't want to bump up against it if you don't have to. And here's how you don't have to. So really, really simple. You just want to, I'm going to use the example of executive compensation as the easiest. You have, an ED who's been there for 5 years. You want to give them a great raise. What you want to do is just collect comparable market data, and you want to make sure that's collected from an independent source. You don't want their best friend who runs a consulting firm to collect that data. You want to have independent board members and disclose that clearly in your minutes, reviewing and approving the transaction. Document that in minutes concurrently. Do not do the minutes 3 months later. Literally while the executive committee or compensation committee board, whoever's making the decision, take the minutes while it's being done, and then just clearly exclude anyone with a conflict from the discussion. So even if there is no disclosure of a conflict, just put in your minutes, it was noted that there are no board members here with a conflict, or however you want to word it. So again, it's really just having the data. And there are different rules for smaller organizations. So if your revenues are under 1 million, you only need 3 comparables. And that can be from a for-profit or nonprofit. You just have to be in similar geographic regions and revenues. So you just want to be comparable. And again, the IRS will explain all this. And then for organizations over $1 million, the IRS doesn't really get too prescriptive about how much data you need. So you can kind of use your judgment there. But you just want to have some data to back up why you set the amount that you did. And then again, independence of the approving body, document the minutes, and make sure no one has a conflict. This simple process shifts the burden of proof to the IRS, and it's called a rebuttable presumption. So the assumption of any transaction related to benefit to your disqualified person is assumed to be reasonable if you do all of these things. And I mean, you can't even miss one of them. You have to do all these things. A simple policy, I think we did share one on our website. So if you go, I'll share the link at the end. We have a sample checklist and policy, just put it in place. It's really not difficult and something a lot of people are already doing, but they're not doing maybe in a combination like this. So do this. Key takeaways from our whole discussion today is DNO, DNO, DNO. Follow the rebuttable presumption process that we just talked about for compensation and document everything as much as possible when it comes to key people in your organization, processes. Can't say this enough. Where does your information live? Who has access to it? Who doesn't have access to it? What happens when someone leaves? And on the compliance side, really know your 990, keep those state registrations current. Make sure you know what states you're soliciting in. And if you need to do I know what's called a unified application where at least 40 states you can knock out in one application. But just make sure that you know where you're soliciting. We're just saying build your bench. You don't have to do this alone. There's lots of resources and sharing, and we want to continue to come together in the current in-person. Our next one I'll talk about in just a second. I wanted to highlight these quotes. This is from the new CEO of the National Council of Nonprofits that I mentioned, Diane Yentl, and she's fabulous and kind of making the rounds and passionately advocating for nonprofits. And, she's really talking about us not being passive. And she talks about our collective power and coming together. And again, that's why we started the current. We need to come together and recognize our collective power. And we've seen pushback has worked. And there is an urgency to the threats that I've talked about. Litigation has been successful, but the importance of new partnerships, Diane is calling out. Things have changed radically, and we can't go back, and we shouldn't. I see this sort of similar to what happened during COVID, but the partnership piece and coming together is really where we're seeing the most need and the most impact to be had. So Diane is a breath of fresh air for the organization, and if you don't follow them, follow them. So just what's coming up, our next in-person gathering is May 21st, and that's going to be storytelling with local news partners. We're going to have the Richmonder and Henrico Citizen, Charlottesville tomorrow. This is sponsored by the Virginia Local News Project. We'll have a couple nonprofit partners talking about the importance of getting stories told and being that trusted source, and just, have a good conversation. We're hopefully having the next one on grant writing, like a hands-on workshop. We want to look at, Stephen talks about this too. It's like, you got to sell yourself. Sales is a dirty word, but it's really something that we need to get better at. So that connects really with the storytelling. And then we thought a fun conversation would be what funders and business leaders, which nonprofits knew, and vice versa. We had a new client just tell us that she met with a very well-known funder, and she sat down with him and he said, "I hate nonprofits." So I will leave the rest of that for the conversation, but I don't think that's a unique view for funders. So just want to leave you, and then any questions you have, please. And Stephen, for anyone, just chime in. This link at the bottom here, it will take you to registration for the May 22nd session. And then if you scroll down, we put a bunch of resources, including that executive compensation checklist in the compliance section. So there's a bunch of resources there. And we just always like to leave everyone with this quote. We're all doing something together that makes belonging matter. So we want to just continue to come together. So I think there's time for, yeah, that's it. So if anyone has any questions, chime in or come off mic. And again, Stephen, if that was, anything else you want to add, please do.
I have a question.
Yes.
Yes. So that was so interesting about the 990. Like, I think that in my experience, it's almost like the CPA will do the 990, but not really understand the mission of the organization. So, like, what
Mm-hmm.
you're saying is it's more about like telling a story and weaving that in than just like, here's a couple numbers and let me just jot it down. So, like, that's
Absolutely.
yeah, I never quite realized that that was like so important of a piece. But you're right, because I've even found myself looking up 990s of other nonprofits.
Mhm.
And so,
Yes.
looking at like what you're doing. Yeah, and had no
Yeah.
clue. That's
It's,
interesting.
yeah. And a treasure trove of data for sure. And, that's where having partners who are doing your audit or your taxes or your accounting who are familiar with nonprofits
Correct.
really helps, because some nonprofits who are smaller, they just kind of have this tried and true, tax person who did it forever, who really doesn't know anything about nonprofits.
Yeah,
So there's not an education they could even provide.
right.
So
It's almost like they look at the price, like, oh, the price is right. So let me get
exactly,
that done, or this is the way it's been done. Okay.
exactly,
Okay.
exactly.
That's very interesting. Thank you.
Yeah. Yes. Thank you. Anything else? We get 15 minutes back in our day. So, we'll send out resources, and thank you all for hanging out this afternoon. And hope to see you in person, um, May 21st. Thank you. Thanks, Peter. Thank you, Stephen, for sponsoring, and talk to everybody soon. Thank you.